Two things are certain in life: death and taxes. Fortunately, there are many ways to get around taxes to help you avoid paying too much in taxes and protecting your money. One way is the health savings account. When done right, it offers 3 tax benefits that you should be aware of. In this video, I'm going to tell you everything you need to know to take advantage of these great tax benefits. Let's go. Hey, this is Carlos with Influential Finance, and on this channel, I make weekly videos to help you improve your personal finances. So if you're new here, consider subscribing. So what is an HSA? HSA stands for Health Savings Account, not to be confused with the FSA, which is a flexible spending account. A health savings account is only for people with eligible high deductible insurance plans. If you are eligible, you can contribute money to your account up to the annual limit according to the IRS. In 2021, individuals could contribute $3,600 and families can contribute $7,200. If you're 55 years or older, you can also make up to $1,000 in catch-up contributions. So how exactly does an HSA work? You can open an HSA through your employer if they offer, or individually if they don't, or if you're self-employed. A health savings account is a separate account, usually with a bank or a broker. You contribute funds to it and can use the funds to pay for eligible health expenses. The sponsor will provide you with a checkbook or a debit card for you to use to pay for the expenses. Eligible expenses include co-pays, deductibles, and co-insurance. They may also include expenses not covered by your health insurance that you must pay out of pocket for, like prescriptions, prescription eyewear, and chiropractor treatments. HSA savings roll over each year, so you don't have to use them up by the end of the year. There's a huge caveat though. You can use an HSA to save money throughout your entire life. If you get to retirement age, which is 59 and a half, all of the money in your HSA can be spent on general expenses. Therefore, many people use this account as a way to save extra money for retirement, if they've already met their limits for their IRAs and their 401ks. So, at the beginning of this video, I mentioned that the HSA has 3 tax advantages. Let's talk about those. While having money set aside for unexpected medical expenses or even expected medical expenses is nice, the tax loopholes are the best part of the health savings account. The first benefit is that contributions are tax exempt. If you secure your HSA through your employer, your HSA contributions are pre-tax. Your employer withdraws the funds for your health savings account before assessing your tax liability for that tax period. This leaves more money on your paycheck and increases your HSA balance. If you open a health savings account yourself, you can take the deduction on your tax returns up to the maximum contribution limit for that year when you file your taxes. The second tax benefit is that your money can be invested and will grow tax-free. Whether you earn interest, dividends, or capital gains, it's all tax-free if you leave the earnings in your HSA. So you are contributing tax-free money and watching it grow tax-free. Hey, if you're enjoying this video, can you please hit the like button and subscribe for more weekly videos just like this one. Alright, let's get back to the video. And lastly, the last benefit is that as long as you use the money for eligible health expenses, you won't pay taxes on withdrawals. Also, like I said previously, your money can be used for general expenses once you hit retirement age. So, who is eligible for an HSA? Not everyone is eligible for a health savings account. You must have an insurance plan with a high deductible, and the plan must be HSA eligible. Your insurance provider, HR department, or even your employer can tell you which plans are eligible, if any. The government changes which plans are eligible each year, so read the fine print to make sure that your plan is eligible. What if your employer doesn't offer an HSA? If your employer doesn't offer a health savings account, but you have a high deductible health plan that qualifies, you can open your own health savings account. To be eligible though, you cannot be covered by Medicare, TRICARE, Medicaid, or your spouse's insurance plan. So now that you know what an HSA is and how it works, here are some things to consider when opening an HSA. First, you should think about how you want to invest your funds. Do you want an aggressive account with mutual funds and stocks? Or would you rather something more conservative that only earns interest? Secondly, HSAs typically have fees. But that doesn't mean that you should overpay. You'll decrease your account balance by paying fees, so choose an account with minimal fees and account balances that you can meet so that you can avoid paying fees. Third, the point of a health savings account is to have easy access to your funds. You should know how you can access your funds and any fees that you'll incur. The most convenient access is a debit card, but you should choose what works best for you. Lastly, choose a financial institution with great customer service. Questions come up and problems always happen. You want to work with a company that will help you through any questions or problems quickly. If you have a high deductible insurance plan or are thinking of switching to one next year, consider funding an HSA to cover your medical expenses. Since high deductible health plans usually have lower premiums, it may free up more money for you to put aside for your medical expenses while you enjoy the tax benefits. If you're not sure whether an HSA is right for you, reach out to your HR department to talk through your options with them. They can certainly help you make the best decision for your personal situation. Even if you can only contribute a small amount each year, any amount you contribute, if you have an eligible insurance plan, reduces your tax liability and grows tax-free. There aren't too many other ways to get a triple tax benefit as there are with the HSA. Tax-free contributions, tax-free growth, and tax-free withdrawals. There really isn't any other account that even comes close to the HSA. That pretty much wraps it up for this video, but if you'd like to watch the video that I made where I compared the health savings account to the flexible spending account, make sure you click on the screen right up here, and as always, make sure you click on my face right here to subscribe for more weekly videos. That's been it. I'll see you in the next one. Peace.